Hi, and welcome to another episode of the Diligent Investor Digest, a channel that hopes to empower the everyday individual to make better investment decisions. In today's episode, we're going to be talking about gold. More specifically, we're going to be talking about the huge demand for gold that's coming from the world's central banks, and we're going to try to get into the reasons for why this is happening. So a good place to start doing our due diligence on this topic is the World Gold Council. They have an article here on the 31st of January 2024 called Central Bank Gold Reserves Swell by More Than 1,000 Tons for the Second Successive Year. They provide us with this excellent chart that summarizes the situation. So as we can see in this chart, the amount of gold bought by central banks was more or less stable in the 2010s up until 2020. This is where we start to see huge volatility. And of course 2020 we have next to no gold being bought, and then it jumps up to 2022 and 2023 where central banks are essentially buying double what they historically used to be buying. Another great graphic that you can find at gold.org is this chart that represents the annual net gold purchases and sales by country in tons. So the biggest purchaser of gold, I don't think it will come as any surprise to anybody, is China. The second country in the list, if I'm honest, really surprised me. The second country in the list is Poland, a European country with a population of 36 million. And you can see here they bought 130 tons in 2023. That's pretty close to China at 224 tons. On the net sellers, we see Kazakhstan leading the way, having sold over 47 tons of gold. Now looking at this, I'm just wondering, obviously Kazakhstan is a gold producer, so it's not surprising to see them in this list. But I'm just wondering, given the sanctions that have been put in place on Russia because of the Russia-Ukraine war, could it be that some of the Russian gold, Russia being a huge producer of gold as well, could it be that some of it is finding its way to Kazakhstan and is being sold from Kazakhstan to avoid those sanctions? Just a thought. Okay, let's go back to Poland for a second. Streetwise Reports is reporting that new buying by Poland's National Bank of Poland during 2023 was only half of what was anticipated. National Bank of Poland Governor Glapiński revealed his plan to buy 100 tons of gold during 2022 and 2021, expressing in October of that year that in order to further increase Poland's financial security, we will continue the current policy. We will certainly strive to increase our gold reserves. So I think what they're talking about here is the fact that gold is not issued by any country, or even if a gold bar is stamped by some country, it's really irrelevant what country it was stamped by. Contrast that with a currency. Currencies are always issued by a government. So if a government falls, you're left with a bunch of worthless paper. In today's day and age, you may not even have the paper. With gold, it's a little bit different. If the country falls that is printed on your gold bar, you really don't care because it's still gold. An article published in Reuters, Why Central Banks Buy Gold, it goes into some of the reasons why buying gold can help the financial security of a country. So as gold carries no credit or counterparty risk, and that's what I was telling you about, if a country that issued the gold coins goes under, it really doesn't matter, you still preserve the value of that gold coin. It serves as a source of trust in a country and in all economic environments, making it one of the most crucial reserve assets worldwide alongside government bonds. Now this last sentence I think is a bit of a contradiction. The government bonds are the complete opposite of gold. Not only are government bonds not money, they're basically IOUs from other governments. They are denominated usually in a currency. So with government bonds, you have all that counterparty risk, all that country political risk. So I would disagree comparing government bonds to gold. And a great example of this is actually, if we go back to our chart here, our chart here that shows that China is actually buying the biggest amount of gold right now. So not too long ago, it was almost common knowledge that China is the biggest holder of United States debt. What that means is that China has been buying United States government bonds for a very long time. Now, in recent years, there has been an increase in amount of tension between China and the United States. A lot of that tension stems from the conflict in Taiwan. Basically, China sees Taiwan as a province of China and it wants to reunite it. Taiwan doesn't really want to be reunited with China. So United States are there saying, hey, we're going to have our warships here, we're going to have our weapons here, basically protecting Taiwan. So think about that from a Chinese perspective. I'm confident that this change in relationship has impacted what China is buying. So up until now, China has been buying U.S. government debt because it was seen as a safe haven in our world. But with this conflict, it now doesn't make sense for China to buy U.S. debt, because essentially what they'll be doing is they'll be lending money to a country that will use that money to build weapons and point those weapons at China. So strategically, it really doesn't make sense for China to be buying it. And I think that's why we're seeing a lot of the money that China's productivity is earning going into gold. Again, because it doesn't have that counterparty risk, it's not linked politically to anything, and gold is accepted worldwide. While we're on the topic of gold versus bonds, I think it's a good idea to take a look at some charts. So here we have the 30-year bond, and as you can see, the trend here is pretty bearish. Over the last 2 years, bonds have been going down in value. Now, a lot of it has been driven by the increase in interest rates. Bonds have a very simple relationship with interest rates. As interest rates go up, the value of bonds come down. But I think it's also important to note that China is not buying US debt anymore, and that is creating less demand, and again results in this bearish scenario for bonds. We can see a similar pattern when we look at the 2-year note, just a shorter term bond. It still has this very much bearish trend over the last 2 years. When we compare it with gold, gold has been rather flat for the last 2 years, but has had a phenomenal rally and kind of kicked off between February and March of this year. Now, if I think of what was happening around this time, I believe this would coincide with Trump being arrested, and that court case where he has to post an exorbitant amount of money for bail. That all happened. So when other countries see a political system that can do that to their president, that certainly increases the political risk. So it's not surprising that a lot of investors would hedge their bets against any political risk, civil war or wars in general, and go into gold. And as you can see, gold has had a very nice rally. So as a final thought, we can definitely see gold rallying right now. Looking deeper at the reasons that may be powering it, it's generally instability. It's general instability around the world, wars, and the chance of a civil war. All those factors are not going away, which leads me to believe that gold is going to continue to have, a good rally. Now, obviously, as with any asset class, it will go down sometimes, but I really do think that as we go through this tumultuous period in our history, gold is going to be a good store of your value. Now, if you pull up a 100-year gold chart, you can easily see that gold is not that stable investment that everybody says it is. You can see it jumping up and down quite a bit, and you'll notice that gold will tend to jump up when there's war in the world. So given that we have wars right now, no one is talking about peace, no one's making any efforts to have a peace deal. In fact, any talk of peace is quickly thwarted by politicians. I do expect war to continue, and with that, people are going to be staying away from government bonds, and they're going to continue to go into an asset much like gold that doesn't have that country risk, that political risk, and counterparty risk. As always, it's very important for you to do your own due diligence on this. I just wanted to paint some broad brushstrokes of what's going on. I hope it helps somebody. If you like this content, please like, subscribe, click the notification bell. Thank you, and I'll see you in the next episode.